All right, welcome back, large audience. QCI number 4. My co-host is back. Speaking of backs, how you feeling, brother?
It was a tough one. I was on vacation last week and it was carrying my kid's kayak, and I played like a round of golf, which I never do. So by Thursday of the week, the back went. I had been playing tennis with you earlier the other week. I feel like that was just one big ploy to get a solo show rolling.
I mean, listen, my back also hurts from carrying this pod, honestly, through the week that you weren't here. But was it the most watched show in history? Don't know yet. Don't know, but we'll find out. We'll find out. All right, we got a ton of stuff to cover today. A lot of action, a lot of quick hits. We got another deep dive. So let's jump right in. As always, keep the feedback coming. We got a lot of feedback about wheeling in some guests going on site, talking about some of the big buildings with experience and going to cities. So, we might plan a road show, and then keep the comments coming on our outfits and attire. We do appreciate that. It keeps us going on
Got a new
Instagram.
sweatshirt. Got a new sweatshirt.
It's crisp. It's very crisp.
Yeah.
It is like a fall morning out. It was weird. All right. Number 1 on the docket today. Interesting. Honestly, super surprising. Fast casual chains absolutely taking a beating. So everybody's corporate favorites, which is why this is super troubling, right? We're coming back to the office. Yet Sweetgreen, Chipotle, and Cava have massive declines in same store sales. So much so that their stocks are absolutely getting hammered. So Cava is down 41% year to date. And, by the time this is filming, the market's dynamic, but Cava was down 41% year to date. Sweetgreen was down 72% year to date. Chipotle down 40% year to date. Same store sales. Again, Sweetgreen fell 7.6%. Chipotle dropped 4%. And Cava, finance and tech bros favorite, growth slowed down to 2.1%. Why is this important? And are you surprised?
So first off, I was doing a little bit of research when I actually did some research this week when I saw the show notes. And we should start with like the massive red flag, which is anytime you're getting memed, that's trouble. And so I was digging into what the kids have been saying about Cava, Chipotle, Sweetgreen, all these, work-oriented, fast casual restaurants. And apparently there's like all these TikTokers and people who do their like, they make fun of, quote, the $17 bowl. And some of them are now pushing for 18, apparently. So it's like $17, $18 bowl. Anytime you start to have your price and your product being memed with negative connotation, they're making fun of you. Like, I'm taking a short on that. But when you actually look at what's happening, this was 1 to 2 weeks ago before their stocks took a nosedive. But Cava was trading at 130x forward earnings. Chipotle was at 32x forward earnings. And so when, a normalized mature chain, you would think it'd be around 20x mature earnings. And so when you look at the growth rates of store openings and things like that, Cava might be able to grow into their valuation, maybe, but if obviously with the same store numbers, that's not promising. Chipotle needs, they're pretty saturated. They would need like a 10% growth, like sustained growth rate to grow into those earnings. So I don't think it's good. And what a lot of folks that were not the kids memeing it are talking about is outside of, it's different city by city, but we're still only at 53% of pre-pandemic kind of office occupancy levels. So we got a ways to go. I don't understand these businesses as well as some others. Apparently Bill Ackman loves the fast casual chain, but I do think what we do understand and what we find interesting is what Cloud Kitchens is doing. And so Cloud Kitchens is Travis Kalanick's formerly of Uber, one of his current companies, creating the robotic bowl builders. Right. So I think on one side, you've got rising labor costs, which I think they're solving. But on the other side, the cultural piece of this is apparently Gen Z is like, yeah, millennials thought it was cool to buy a $17 bowl and like pay with a fancy Toast POS. And they're like, that shit is lame now. So They got to figure out a way to revamp the vibe of.
Yeah, but what's troubling, and so there was one other incredible meme going on, which might not even be a meme, that apparently in and around Wall Street in Midtown, where JPM's new headquarters are, there were, I don't know if they're Gen Z or millennial or whatever they are, they got to be younger. Apparently, young ladies would go in and steal bowls in the hopes of meeting some finance bros with high net worths, buying those 18 as a new way to date. You could meet somebody. And then there's the memes about the Cava bags being like the biggest flex walking around New York City. But here's my issue. There's two things. Why? I guess it doesn't make sense to me, right? And we'll talk about some more return to office. We'll talk about some pre-pandemic levels a little bit later. But if folks are all coming back to the office and now we're seeing these massive dips in same store sales, like that to me that's a big underlying issue, because you have more people coming in, you have more traffic in cities, and yet the most popular food options through the pandemic are now absolutely falling. Is that a price thing? And then really where the pain is going to be felt is the landlords, because a lot of these retails, their largest leaseholders are some of our customers, some of the big landlords. They got percent rent leases. This could have a pretty serious impact outside of like the fun memes. Oh, people are now bringing their lunches to work. This is going to ripple. This is big.
Yeah, I mean, I think it's a top line and bottom line issue. They got to bring the $17 bowl. I think inflation and all this is just kept catching up to people. People are tired of overpaying. And then they got to get the harder part, because I do think there's going to be a lot of technology and automation that brings that down. But got to get the vibe right in, post-pandemic office culture world. And they might be losing the vibe cachet that they have.
Yeah, I mean, Sweetgreen's garbage. It's just sloppy and wet.
They call it like bull slop. A bunch of the analysts on X called the bull slop industry.
But it's troubling. Okay, especially by our office in downtown Crossing, Boston, you have all three of them right next to each other. It is
everything. The whole vibe down there is trash. Like every other neighborhood in Boston's better. Downtown Boston's trash.
It's not great. Okay, speaking of trash, or what was once trash, that's my intro. Let's talk about crypto. Crypto is absolutely ripping. It's ripping. It's back. BlackRock now holds 104 billion in crypto, which is up 90% year over year. Harvard and all those smart folks, what was the stat? I don't have it in front of me. They were claiming that they would never buy into, it was like Harvard and Yale would never buy into crypto when it was at like, $17,000. Where Bitcoin was trading at 17,000. Now Bitcoin's trading at 117,000, and they made their biggest buy to date. Where is this going? Is crypto going to continue to go up? And then what does this mean for hedging against the dollar? What does this mean for stable coins? What does this mean for tokenized real estate, and really the entire crypto environment, and not just what most folks know about coins? Just hold it in my wallet. Maybe it's a play to make a quick buck.
So what I love about this is all these people are talking about, back in 2017, Larry Fink called Bitcoin like the ultimate money laundering scheme. And so everybody was like, oh, he hates it. And I was like, no, he probably likes it. Like,
yeah, that's a feature, not a bug.
Oh, yeah. Why did everybody assume that was a bad thing? Just kidding. But, he called it the ultimate money laundering scheme. And then just in 2024, he said Bitcoin's bigger than any government. So I think, look, it ultimately comes down to, they launched IBIT, which is their Bitcoin ETF. And what they've very successfully done, shocker, is they've figured out how to institutionalize, decentralized finance, which is, there's a lot of people are going to have a lot of feelings about that. But, the biggest gangster isn't the person who's breaking the rules. It's the person writing the rules in their favor. Mm-hmm. And so they've figured out a way to, get the rails and make it work for the big institutions. It is funny just reading about how, apparently it's easier for the big institutions to buy Bitcoin through that ETF. And I'm like, it really isn't that hard to buy Bitcoin, but it's formally gone from, the whole decentralized, to steal our boy Johnny Hilbrand, cowboy crypto energy, to it's mainstream, man. It is fully mainstream.
Do you think it's mainstream yet? Mm-hmm. Maybe. Do you think it is? I think it's still early.
when BlackRock is ETFing crypto, it's officially mainstream. Like they're between them and Blackstone, I forget, it goes back and forth who has the most hate. But
I guess a couple of years ago, I would have said it was mainstream when you had like rappers tweeting about it, like, should I buy Bitcoin? Maybe that was the mainstream. Now BlackRock coming. My mom, I don't think owns Bitcoin yet. So maybe
it might be in an ETF where she doesn't know, like.
You're probably right. You're probably right. It's probably buried in some 401k holdings. And by the way, there was news, and I think I killed the show notes because on this specific one, but you will be able to hold alternative assets in a 401k. So forget even ETFs. Right. You will be able to hold real estate and crypto and stable coins directly in your 401k.
Yeah, Trump opened that up. So I think, like, at the end of the day here, I think it's been institutionalized, which is going to be a great thing for those of us who held early. And it'll be interesting.
Those of us, would you just doing one of these real quick? You just that
got Bitcoin at 7,000, my man. So I'm all for this.
Is that how you got that new sweatshirt this morning?
Yeah, I'm lending out my Bitcoin to buy this sweet sweatshirt.
Next quick hit on the docket. So we know that folks are trying to get people back to the office, and we get some news on that in one of the other quick hit sections. We haven't seen yet the policing, right? So I got a buddy who works at Amazon. He's supposed to be in the office technically 3 days a week. It's been mandated 3 days a week. He shows up in the morning and then leaves by lunch. And then he brings in his buddies, bring their badges and all that sort of stuff. PWC, which great way to go about it, right? I mean, I think we've talked about this before. PWC is, and of course, it's an accounting and consulting firm here. They've taken it a step further and they're actually starting to police. So now what they're doing is they've created a dashboard based on badge swipes that's similar to a performance rating. You now will see monthly, weekly, and daily whether you are at the standard. Now, they've taken it a step further, PWC, their mandate of being in the office 3 days a week. Not only are they watching badge swipes at their headquarters in the UK, they're checking Wi-Fi logs, and they're making sure that you're actually at the client sites. To me, I mean, I get it. You got to get people in the office. If they're not going to come willingly, you got to hit them with the stick. But like, we've just taken a massive step back in society if we got to police this shit. Like, come on.
Completely disagree. Love this move.
Get out of here. You got to check my Wi-Fi log to make sure I'm visiting my client?
Love it. Love it.
Come on.
I mean, no, it is a fun feature of the office. It makes it's like a little game.
It's so fun.
LED lights. It's like a club, man. Like, I love this. It's like privatizing dystopia. Like, it's super cool. Like, I'm a big private markets guy, and everyone was like, "Ooh, the government wants to spy on us," which I'm not into. However, when it's PWC,
fine,
you like their people, cool.
I think PWC
they want to work there.
Yeah, I think they got to get other stuff in order maybe before. Right? Who wouldn't want to work there? Yeah, it's a good point.
LED banditry. I love it. Just don't. So I didn't actually. Did you see a picture of it? I didn't see a picture of it. Like, is it like a stoplight type situation?
No, it's basically an employee dashboard when you log into their intranet every day, whether you're red, green, or yellow.
Your
standards.
That's not as cool. I thought like you go through the turnstiles and it's like,
whoa. Like, you're not hitting it.
Isn't this fun? Like, it's like the ultimate corporate try hard move. Like, green. Like, now they're playing like walk-in songs, and like, I do think you could make this kind of funny, right? Where like you play different songs for people as they come in.
If you were badging in and it had a walk-up song, as you were getting into the elevator, that would be fun. That to me is more exciting than it tracking my Wi-Fi pings to making sure I was at the client. Although I do like it. I mean, listen, at some point, bad actors got to be called out, and you got to figure out who they are. Is this a little bit of an overreach? I don't know.
If you incorporate music, if you incorporate a little pop to it, I think this could be a positive. Like like a little public shaming, like you swipe in and you haven't been at the standard, so it's like mwah mwah.
I do like public shaming. Yeah, you're right. I will take this to public shaming. I don't like that it's on your own dashboard. If it was on everybody else's dashboard, you could see everybody else coming in.
Yes, my whole issue with this is implementation and execution. So this could be really weird and uncomfortable, and anything in an internet sucks. Like if it's an internet, gross. But if they're if they got a little humor being blended in, like I'm for that. So I don't know. I think you got the wrong take on this.
I don't know. Speaking of return to office, Microsoft. Oh, by the way, did you see Elon's tweet about starting a company called Macro Hard?
No, I didn't. No, I've got the app blocker thing. I haven't been on social media much.
I mean, Microsoft Macro Hard.
It's a better name. So
it's a better name. But anyways, speaking of return to office, Microsoft, they're starting to make people come back 3 days a week. I don't know if they're going to be tracking people like this. To me, I guess I would have assumed Microsoft, they're leading in AI, I guess, through their investments. Satya is big into the office. Why now? Like, do we care now? Is this just like, is it, or wait a sec, I think I got it now. I didn't put it in the show notes. This is his way of removing headcount again.
Oh, I'm sure it's a combination.
That's it. Yeah, just removing headcount again.
Okay. Look, I honestly was a little surprised they're just getting to 3 days now. I was under the belief that they had already done it, but they'll continue to get rid of headcount. And I mean, look, all the big companies now want people back. So this is it feels like the pacing of a company as big as Microsoft doing it now. And I just can't believe people are still writing about this shit. Like,
I know that was like seeing it, PWC, Microsoft, like enough guys, enough, whatever. I mean, listen,
I'm still PWCs. We got to hold out. We should ask some people from PWC, like, is it cool?
Yeah, is it cool? All right, we got 2 more quick hits, and we get to the main story. This one talk about money moving, money flows. Good or bad, the real estate secondary market has hit a record 100 billion this year. So these are not primary transactions. These are secondary transactions. I guess the argument is that money moving is a good thing no matter what. But if you're buying a secondary transaction and you're desperate for liquidity and you're buying at a discount, is that good? What's your take on this one?
I mean, this is just typical evolution, right? We got private credit in the 90s after the savings and loans. So when everybody gets jammed up, not just in commercial real estate, it's any asset class, the market finds a way. And so people have had liquidity issues, as everybody knows. They keep kicking the can on refinancing their loans and their debt. So I think all we're seeing is commercial real estate solved their problem after the savings and loans, primarily through the private credit market, which boomed in the 90s into the early aughts. And then over the last tech cycle, secondaries became huge. And, hold periods for your winners and venture portfolios needed to get a lot longer because these companies just kept showing that the TAM was a lot bigger than people originally projected. So secondaries came into other alts. So this isn't too surprising. Now, what I think would be more interesting is to go and look at, because you're seeing across all these real estate portfolios, nobody is immune to some of the issues. So like, do we have one fund manager? Right. Are they just buying like another fund's distressed secondary at a lower price, like in some of their assets? And then those guys are then buying some of the secondaries and in the other one's distressed assets. I'd be interested to see like who owns what after the secondaries flow. But the other piece of this that's interesting is like a lot of these LPs need liquidity, but a lot of the LPs are also starting to flex and say like, hey, we'll come into your next fund, whatever, but we're going to take a piece of the management company or the GP take. So like a lot of fund managers and GPs, I think, are starting to get hammered by their LPs.
Talk about that for a sec. Go deeper. Why is that? Why is that important? Is that because gains and returns haven't been great. So they want a piece of the equity, the enterprise value of the holding company and GP. Talk about that for a second.
Yeah. And this is where the GPs are getting it on both sides, right? Because on one side, the demand occupiers, regardless of asset class, except for probably multi, but they're squeezing them on leases and office and things like that. And then on the flip side, the LPs are like, look, everybody's having trouble raising funds. Not everybody, but even the bigs and the most powerful, have had distress in their portfolios. So when you're negotiating the promote, the fees and carry, for people who don't understand, typically like when you have a fund, you negotiate a standard management fee of the capital, and then whether you call it the carry or the promote, once you cross a certain profit threshold, you get into the profit sharing. And so they're squeezing them down on that. But I've read about a bunch of folks who are now saying, like, we also want a piece of the G. So people are going to have to hunker down and figure out how they negotiate some of these things. They need to engineer liquidity for LPs. They need to raise new funds. So the folks that get it done now, though, are going to make a killing. That's for sure.
Yeah. I mean, it's an interesting shift. Any kind of money moving is good. You're starting to see buyers back in market. It's going to be interesting to see. It's going to be interesting to see how everything shakes out. There's still a lot of distress. And speaking of distress, and there's distress in pockets, but there are markets that are coming back. So like you were saying, which funds are impacted? My guess is that some specific funds are certainly going to be vintage driven by the year, but also by the location. So New York City, Miami, apparently, according to a handful of studies, they've had their hottest in-office month since the pandemic. So they're officially, quote unquote, back. They're back. So
is that July?
That was July 2025 office index. So pre-pandemic versus post-pandemic July. Miami, New York are back. We'll get into Miami in a bit. Atlanta, Dallas are close. SF, which is still, and this is why we're talking about like which markets and whatnot, is still has a lot of distress. However, it's got the highest growth now. So it's surging. It's the comeback kid, right? We know that return to office mandates are leading to this. But what's your, are you surprised? New York and Miami? Does this matter? And then again, to the top story, how can New York, the slop bowl capital of the world, still see all of these same store sales go down when we're apparently back? We're back in the office. What the hell are people buying? Are they back at McDonald's, Taco Bell, KFC? What the hell are they buying? Are they bringing fucking Tupperwares? There's no way people are bringing Tupperwares to work.
I don't know, man. I think it's a combo of, McDonald's is way too expensive.
Snack wrap, dude, the fucking snack wrap is back. Have you had one of those recently?
What is that?
I wet my beak, dude. The snack wrap.
Yeah,
the snack wrap is back. There's two of them. I don't know when they first came out, but they're back. There's a ranch one and a buff one. It's a little fucking wrap with a little chicken nugget in there. Oh,
at McDonald's?
Mac does.
Never heard of a wrap.
Burger King. It's unbelievable. Yeah, we'll get some this afternoon.
Now you're just crossing streams.
We'll get some this afternoon.
Yeah, no, I've never had those. I also don't understand people who get filet of fish. Like, that to me makes no sense. But I think the slop bowls aside, I don't think tracks. I think that's a cultural thing, and it's a product thing where they got.
I would have thought it would have been a leading indicator to office returns. I'm wrong.
No, I think there's a barbell effect. If people are saying you can go get a decent sit down meal for the same cost that you're getting the fast casual, and the fast casual now, well, with the lines, you're like, well, this is taking me too long anyway. So I think people are either going like super low cost, efficient, bring my lunch, or might as well go sit down. I don't know. So
I would love if the trend was business lunches are back. Couple of martinis, couple of steaks. One of our customers, who's an absolute New York City legend, every time I ask him to meet, and I won't mention his name because he's an absolute legend, he puts instructions in an email: please make the reservation for this steakhouse and request a booth up front by the windows.
Don't attend.
Well, yeah, and then he was like, and
Please
honestly,
make a lunch reservation for me
thanks for
alone.
making the reservation for me. Please stick around, Boston. This is just for me. I'd love it if that was the trend. I think we need more of that. Honestly,
Yeah,
that
I
might
don't
get
think it
people
is,
back.
but
That might get people back to the office more than your fucking stoplights, which are terrible. All right, let's talk. Let's go into Miami. And this is actually an image where CNBC is ripping off some language from us on quantum cities and quantum real estate. So let's go into quantum cities for a bit. Let's talk about Miami. Cue the background noise. Let's get that going.
right.
We've talked about
Cool.
quantum cities. We've talked about New York. We've talked about Miami. Is Miami Silicon Beach? Is it the new Silicon Valley? Where's your head at on Miami? Is the hype train here? What's the data? What's your take on Miami? It was great during COVID. I think you spent some time there. One of our colleagues was huge into Miami. That sort of pre-pandemic levels are back. Where does Miami rate these days?
So I'm incredibly long and bullish on Miami. Their mayor is doing an excellent job. Miami is a little bastion of economic freedom plus social freedom. So they got a great little mix going on down there. And I really think they're designing essentially the city of programmable prosperity is what I would call it. They've been early on a lot of, I think, important trends, but particularly when we talk to commercial real estate groups, we continually hammer the what industry sectors can you cater to and cluster, because if you're going to cluster industry sectors, you're going to find alpha, and most people say Tammy and fire. And that's basically the economy. Tech, advertising, media, and information is way too broad, and fire, finance, insurance, real estate, way too broad. And so Miami has leaned into a really important intersection of institutional finance, but crypto, right? So they're really vying for crypto capital, which they're doing really well. The mayor himself, like, personally recruits people and tries to bring people into the city, and he's incredibly charismatic. So he's done well there. They've played pretty well at that whole like live, work, nomad talent. So they've pulled a bunch of talent on that side, and it's incredibly light regulation. So when we think of kind of the quantum city framework, individual liberty, they're doing a very good job from an economic dynamism perspective. Ken Griffin at Citadel was just in the news the other week, absolutely pumping Miami. He's moved the headquarters, I believe, down there. Now, this is funny because I was doing research earlier this week, figuring out who's moved to Miami. And it's just like flat out wrong. They said Anduril moved their headquarters to Miami. They have not. So you got to be careful with the AI research. But
not everything you read on the internet is true.
Yeah, which is a whole new phenomenon. It used to all be true, and now it's not all true. So we got to be careful about that. But it's not just tourism. Like, they're doing really well. Obviously, what Stephen Ross from Related is doing with Related Ross, he's basically building a mini city, which is pretty impressive, down in South Florida. And I think the most impressive thing I've seen from Miami, because a lot of people do economic development, but they do this stuff, they call it fast lane permitting. And so the mayor was on a number of different media, but he did a really good interview with the All In podcast where he talked about how they've just driven kind of the regulatory time to get stuff done down significantly. So system efficiency, they're doing really well. In terms of citizen design, they have these like civic APIs that they've opened up, that they're trying to build modern infrastructure. And in terms of like city compute, apparently there's Metro Blocks is building a big site. There's this NAP of the Americas hub. They're really trying to be this gateway to Latin America. That's interesting. So GDP growth in 2020, it was about 166 billion. It was 240 billion in 2023. So that's a pretty good ramp for Miami.
So on the individual liberty side, okay, I get it. Business, tax credits, Citadel, all the big dogs are moving down there.
Dude, have you been to Miami?
The weather's nice.
Have you been?
Not in a while. Not recently, actually.
It's free. I love it.
Been to West Palm Beach more recently. But anyways, so okay, so let's talk about housing. Can folks afford to live there anymore? Are we just gonna? Are we gonna price everybody out? Talk about individual liberty. That's great if all the banks and the bankers go down there and we get a bunch of super wealthy folks living in Miami. Is that what we're turning Miami into, as opposed to what, the drug capital of the world? I don't know.
I think they've shaken that one, but
I don't think they have. I was playing Grand Theft Auto the other. No, I wasn't playing Grand Theft Auto. I wish I was playing Grand Theft Auto, but
yeah, I think they shook that one. But I do think that so there was all this. CBRE came out with their data on multifamily absorption in first half of the year was huge, and everybody still talks about this national housing crisis. I find that to be a complete oxymoron. I don't think there is such a thing as a national housing crisis. Their housing is local, and it's a local issue that needs to be solved locally. And it's a huge competitive frontier for local governments to solve these things. So
can't you just make a blanket statement that if all local housing, if there's an issue with local housing everywhere, it's a national issue?
Yeah, I mean, that's taking a very blunt object where we need a scalpel, because San Francisco is not the same as Worcester, Massachusetts. So it's a access to economic prosperity issue on one side. Obviously, housing, being close to economic opportunity, is critical. And then the issue is down in South Florida. You cross one line, you're no longer in the city of Miami, but you're still in the economic zone. And so where do you have NIMBYism, right? The whole not in my backyard thing, which it comes down to partnership between state and local government, figuring out how to get around some of the NIMBYism thing, which is, oh, I don't want to build, I don't want to open up more opportunity, because it's not when you actually look through census data, we don't have a shortage of housing. We have a shortage of appropriately priced housing in the right areas. So specific to Miami, I'm sure they definitely have high housing prices. It's apparently like booming residential market, but I think price is probably still an issue because of the complexity of all the local governments that do things differently. So, when you think about like the Miami-Dade area, but I continue to, anytime people talk like in these broad macro strokes of housing crisis, it's a great headline, but it's not at all a useful conversation, because you got to solve San Francisco and the Bay Area differently than you solve Los Angeles, differently than Chicago, right?
I agree with that. I think that, the policy side of the house is huge, certainly in Florida, Miami. What about resilience? So resilience is a critical element. Energy resilience across the board, we know there's issues. We talked about the power grid just not being able to sustain, never mind the artificial intelligence and the sort of data warehouse. But you're also talking about Miami. Miami gets just demolished by hurricanes.
Mm-hmm.
Weather's an issue. Sea level rising is an issue, maybe. What's your take on the energy resilience? I mean, with all of the economic development and the citadels and the large banks of the world moving down there, we have to see an infrastructure upgrade.
Well, again, it's going to come down to the people, and like the simplistic version has to be, if you're regulated to the teeth, then you're just not going to be resilient and figure out ways. Because everybody from an energy perspective, and this was covered at the AI summit, like energy needs to be solved everywhere and based on climate.
But can energy, so your point of housing can't be national, it's got to be local. Is energy not the same thing? Can we say that we have a national energy crisis, or is energy got to be local?
Well, you can at least have measurement of how much total electricity and the efficiency we produce electricity is a barometer with housing as well, but it's a blunt metric, where I would be interested in an overall dashboard, which is what states and what metro regions are producing what amount of energy at what cost. And then obviously from a sustainability perspective, I don't know enough, because it's like, all right, electric's great in certain areas, but when you look at electric in China, it's still being produced by coal, right? So it's like, it's a hard one to pull apart that we could do a very deep dive on, but everybody is going to need to upgrade for sure. Everybody needs to. I don't think anybody would say like, we feel great about where we are today. that's a good topic for us to continue to hit on. But everyone's going to need this, particularly with, you mentioned the quantum real estate segment on CNBC the other day. The data center for AI apparently is a very different product than what quantum computing is going to need. It's different racks, different physical infrastructure required for those. And so power needs are only going up and to the right, and they're going up and to the right quickly. And so we're going to have to have a competitive landscape where different regions try different things to figure out what model works. Central planning I don't think will work.
Speaking of upgrades, and I didn't know this stat, but it's apparently true. Miami is the OnlyFans capital of the country. There's more OnlyFans producers in Miami than anywhere else. So talk about quantum. There you go. But speaking of upgrades, the Playboy Mansion is moving from LA to Miami.
Is that the dashboard you're following?
That's the quantum dashboard.
You got an energy one. We got an AI.
There's a lot of money. Speaking of money flowing, there's a lot of money going through OnlyFans. Playboy Mansion's moving to Miami.
If you want to erode the power of the United States, that's convince generations. That's a good way to make money.
They're cleaning up. It's terrible.
I don't doubt it.
One more thing this week. Last week's one more thing wasn't great, but it is what it is. You got to follow the pop culture trends. Sometimes, some weeks there's good stuff, some weeks there's bad stuff. One of my favorite artists of all time. Call me a Swiftie. Don't call me a Swiftie. Whatever you want. T Swift is back. She never went away. What was most exciting about Taylor Swift this week is she announced, and you're going to love this if you haven't seen it, she announced the launch of her new album, which is just crazy. She does this shit. She puts these Easter eggs everywhere. It's like the most wildly crafted PR thing in the entire world. Yet she announced the launch of her new album on a football podcast, The New Heights Show, with Travis and Jason Kelce.
Yep.
Absolutely brilliant. Couldn't have done a better job with this one. It exploded.
Yeah. She's good at business. That's for sure. And by the way, like, there are no new ideas. So everyone's talking about, like, was it innovative? First off, think it was brilliant. She is, when you think about the Quantum City blueprint and you just look at the economic lift her tour would bring to the cities she would go to, she's like a economic X factor. So, like, fully behind everything that she's doing. However, the rap game's been doing these collabs forever, where like Jay-Z starting in the 90s, like, in order to grow his audience, collab with some different folks, right? Like, then he typically would start in different pockets of rap, but then he would Chris Martin, Coldplay. So he's just broadening his audience reach. What I do think...
breaking up marriages? Where are we going that one?
Well, no, he's just reaching the Coldplay audience. I can't speak to the marriage piece of it. But what I will say that's brilliant about hers is specifically doing it on the football pod. By the way, I know they don't like each other, but this is a very Trumpian move, which she knew it was going to piss people off. And apparently Trump would tell his kids growing up, like, if you want a topic to be talked about, you got to make it controversial. And so she made it controversial by doing it on the football pod, because the football people are like, oh, what the hell? Why are we talking about Taylor Swift? Right? Brilliant move. So immediately controversial. She gets all this pop, and that album dropped harder than a tequila shot in Miami, man. Like, that was impressive work. I mean, she's just cooking at A+ level game, but of course you just overlook my boy Biebs, who should be your boy since he did tweet your name several years ago.
Justin came out with a song that's mediocre at best.
First and foremost, that's offensive. I haven't listened to the whole song because I was so
Exactly.
I wasn't listening to music. I was watching the art of the video where he's just at a cabin in the mountains. He's just looking outside. Like, he probably smokes too much weed. He clearly is like, that can't be good for his chemistry. But, like, whatever. Put that aside. He looked happy and healthy, man. I was happy for him.
Happy and healthy. Yeah, Biebs was out this week. So speaking of shots in Miami, taking tequila shots in Miami, one more bit of news here. U.S. alcohol consumption. So I got a couple of stats here. At its lowest in 90 years, with only 50% of adults reporting that they drink. Okay, so there's stat number one. You can react to that in a second because I have a couple of other stats. However, so we're at the lowest in 90 years. 54% of adults reporting that they drink. So that's big. Meanwhile, Oasis just set a massive record at Wembley Stadium by drinking more than 250,000 pints per night. So fuck that.
Shattered the record.
Champagne.
Wasn't it like 160,000 pints?
So it was 120,000 pints by your boy Chris Martin at Coldplay. Okay. So there's a callback. You're welcome to Coldplay. Champagne Supernova absolutely shattered it. And then my girl T Swift at the Eras Tour. And hopefully you haven't seen the notes. I'm going to ask you to try to guess. At the Eras Tour, how many pints per night do you think they drank compared to? So you have the high water mark.
Pints of beer?
Pints of beer at the Eras Tour.
So Oasis is 250, shattered the record. That's an outlier.
1,000. Coldplay's 120, half that.
120, and that was
which was the previous record.
50?
T-Swift Eras fans.
50.
40,000. Yeah. Mostly because they're all underage.
Yeah. Well, yeah, they're not drinking. I mean, that actually even seems high now that I'm thinking about it.
Because you got a bunch of dads who are just fucking pissed off that they're just gassing.
Well, they're not. They're psyched to be there. Let's be honest. That's a hell of a show, I bet.
Bro, Beams might be onto something because booze consumption's down. I haven't seen my man Justin hit the sauce.
He doesn't look like he's had drop. I mean, he's looking fit. He's looking fit.
But weed consumption, he's all about it.
Yeah, I'm a little worried about that because I'm rooting for both of them hard. So
T Swift and Beebs.
Yeah.
Welcome to the club, dude. I've been fucking rooting for them forever. Come on.
Yeah. I mean, look, that 250 pints, I don't think there is a better example of some of the cultural diversion right now we're seeing between the United States and Europe, where it's just there's a little tension in the friendship. And of course, the US is doing all these TikTok dances and smoking weed, and the UK just leveled up and we're like, yeah, dude, we're going to absolutely shatter the pint record.
Gas and beers. I don't think, I guess they are, that's where the band is from, but it's an Oasis thing, man. They're back.
Wait, where was the show?
Wembley.
Yeah. Okay. Yeah.
But Oasis? I mean, come on.
I mean, those guys are
growing up listening to those.
Yeah, great.
Gentlemen. And they broke up forever.
A little tension there, but
no. All right, folks. That's all we got for today. Thanks for coming out.